Hello, and welcome to Virtual Investor Conferences. My name is Matt Lateplo, and on behalf of OTC Markets, we're very pleased you have joined us for our next live presentation from Skeena Resources. Before I introduce our speaker, a few points to note. Please submit your questions in the questions box below the slides. Once the Q&A session has ended, don't log out. You will automatically be transferred into the Skeena Resources booth where you can continue to ask questions via chat and access shareholder materials. On a final note, all of today's presentations will be recorded and available for 24/7 replay. At this point, I am very pleased to welcome Kelly Earle, Vice President of Communications of Skeena Resources, which trades on the OTCQX Best Market under the symbol SKREF and on the TSX under the symbol SKE. Welcome, Kelly.
Thank you for having me. So thank you everyone for joining me. We're going to be talking today about Skeena's Eskay Creek project, which is located in the Golden Triangle of Northwest British Columbia. We'll just start by going through the forward-looking statements. And then we're going to start with our property locations map. So Skeena currently has two projects located in the Golden Triangle of Northwest British Columbia. Our focus is really Eskay Creek. Both Snip and Eskay Creek are past producing mines that we optioned or acquired from Barrack. Skeena had a third project in the Golden Triangle called GJ, but we recently just sold that. It was close to the Red Chris mine, so we sold GJ to Newcrest for $7.5 million in cash, and that just closed last week. So I'm briefly going to touch on the management team of Skeena. The whole management team and board of Skeena is new within about the last 4 years. The company as a whole has been around for quite some time, but really a brand new team within the last 4 years. Our CEO is Walter Coles Jr. He's an investment banker by background, and he's really led the charge in developing the new Skeena. Andrew McRitchie, is our CFO. He has ample experience, CPA, used to work for PricewaterhouseCoopers. Paul Getty is our VP of Exploration. He's formerly with Barkerville Resources, and he left them a few years ago now to come join Skeena because he was so excited about the potential at Eskay Creek. I look after all the communications, investor relations. I'm a geologist by background, but then went back to school for business. Justin Himmelwright's our VP of Sustainability, which I think some people find a bit odd that a company of our size has a VP of Sustainability, but we have two past producing mines, so our environmental, First Nations, and permitting are very important, so that's what Justin looks after. Craig Perry is our new chairman. He stepped up to be chairman about a year ago. He's CEO of ISO Energy and one of the co-founders of NextGen. Gordon Putnam is our geologist who's on the board. He was an advisor to several large investment funds in the United States. Isaac Bernstein is our representative from Hochschild, who's on the board. Hochschild has an option to earn a 60% interest in our SNP project, which I'll touch on a bit later. And finally, Suki Gill, who is an accountant and a partner with Smythe in Vancouver. So with that, I'm going to move right on to our projects. So as I mentioned, we're in the Golden Triangle. And one of the reasons we were attracted to the Golden Triangle was because of the vast improvements in infrastructure since these mines, Snip and Eskay, were in production. So they were both in production in the 90s, early 2000s. This area was very remote at the time, fly in, fly out, diesel powered. And since then, we've had Highway 37 and the Northwest Transmission Line built, which goes all the way up to Newcrest, Red Chris mine. And within the last 7 years, we've had 3 hydroelectric facilities built right in between Snip and Eskay. So that means we have access to 6 cents per kilowatt hour Canadian power, and it's only about 7 kilometers down the road from Eskay Creek. So it completely changes the infrastructure and the cutoff grade at which you can mine. So jumping right into Eskay Creek, I'm not sure if everyone's familiar with it, but it's a pretty famous mine. It's the former highest grade gold producer in the world, produced from 94 to 2008, produced 3.3 million ounces of silver, 3.3 million ounces of gold, and 160 million ounces of silver, 45 grams per ton gold, and over 2,000 grams per ton silver. So extraordinarily high grade. Again, because this mine was so remote and it was all diesel powered at the time, it meant the cutoff grades were extremely high. So when the mine opened, they were doing direct shipping ore with a 30 gram per ton cutoff grade. And then after that, when the mill was built, there was a 15 gram per ton cutoff grade. So our thesis in acquiring this project was pretty simple. what material was left behind that was below these extremely high cutoff grades that wasn't economic when the mine was in production because of low gold prices and how remote the mine was, that would be economic now. So I'm quickly going to touch on the option terms. So we acquired an option from Barrack in December of 2017, a 3-year option. We paid nothing up front for Eskay Creek except a commitment to spend $3.5 million in the ground. We spent all that money in the first year. The next phase of this option is for us to purchase the project 100% outright from Barrack and post a bond. So the purchase price is $10 million, and when we negotiated this, the bond was estimated to be $7.7 million. But we know that bonds can go higher than that, so we worked out a deal with Barrack that if the bond goes higher than 7.7, then the purchase price goes lower. So we're locked in for a purchase price of $17.7 million, and we work with an insurance company who posts a letter of credit for us for 50% of the bond, so we only actually have to put up cash for half of the bond. The final piece to this is that Barrack does retain a back-in rate. So once we own 100% interest, Barrack has 12 months to decide if they'd like to come back in for 51% by paying us 3 times our accumulative expenditures. So if we spend $60 million on the project by December, then they would have to spend, $180 million to get 51%, plus repay the $10 million purchase price and post 51% of the bond. So we have discussed this with Barrack. We understand that the back-end rate's a bit of a hangover on the stock. So we talked to Barrack and we said, if you're not interested in the project, then let us take this off your hands sooner and get rid of this environmental liability for you, and then potentially give you cash or shares in Skeena, and then you can participate on the upside of the project as we move this forward. So Barrack seems to be open to this idea. We've had discussions on this, and we hope to have something sorted by the summer. So I'll move right along into the resource. This is the resource that we put out for the project last year. It kind of blew us away in its size. Combined, indicated and inferred, there's 4 million ounces at Eskay Creek right now, and the average grade is 4.4 grams per ton gold equivalent. So extremely high grade for an open pit. There's about 300,000 ounces that are in the underground category still. You can see on the left-hand side of the screen it says underground resources, just about 300,000 ounces there. The other 3.7 million are all open pittable, and it's those 3.7 million ounces that we pushed into the PEA. Circled there, I've got the grades for the inferred and the indicated. You'll know that the indicated grade is significantly higher, almost double the inferred grade, and that's largely due in part to drill spacing. So the indicated ounces are where the historic mining was, so they're drilled down to about 10 to 15 meter centers. The inferred ounces are where historical mining didn't occur because it was lower grade than the cutoff historically. So the spacing's a lot wider, about 50 to 70 meters. And when you're working on a resource, the further you move away from a hole, there's a penalty to the grade. So we're very confident that as we infill drill, we'll be able to take that 3 gram per ton gold equivalent grade and bring it up closer to the 5.9. So we're sitting at 4 million ounces at 4.4 grams per ton gold equivalent right now. And our target internally is 5 million ounces at 5 grams. And we're on our way there, and I'll show you a cross section in a second that'll point that out. I'm going to play a quick video here that just kind of gives the lay of the land at Eskay, and also a bit more detail about the resource. Here's a map here of the Golden Triangle, and we'll zoom in and see our projects. This video still has GJ on it, so you can see the project that we just sold to Newcrest for $7.5 million, and then there's Snip, and then Eskay will pop up. And you'll see Highway 37 and the Northwest Transmission Line. So there's been about $2 billion in infrastructure improvements in the last decade in the Golden Triangle, so it makes exploration a lot easier. Those are the 3 hydroelectric facilities. Volcano Creek is the one closest to Eskay, about 7 kilometers down the road. We have road access for this project, which means we can drill year-round, which is a bit of an anomaly for the Golden Triangle. And we were, in fact, drilling there throughout the winter. So this will show us some drone footage. That's the ridge there on the left. That's where the open pit would be. So we're kind of dealing with rolling hillsides. There's no glaciers, no steep mountains here that we have to deal with. So pretty decent terrain for the Golden Triangle. There's a drill in one of our 21 zone areas right there. And now we're going to zoom in and give an underground view. So that's the proposed pit, the main zone pit, and then further off to the south is the 22 zone pit, but the bulk of the resource is in this main zone pit. So you're looking at the resource there, that's that 4 million ounces at 4.4 grams. We've divided it up into two zones. There's a mudstone horizon, which is extremely high grade, and then below that there's a rhyolite horizon. This is a VMS deposit, volcanogenic massive sulfide deposit, which just means that it represents the seafloor at one point in time. It's very continuous and tabular in nature. Basically, you have hot fluids coming up under the seafloor, and that would be the rhyolite feeder structures, the gold here. So you've got mineralization there. And then once the hot liquids hit the seafloor, you get the main exhalative event, and you get this mudstone horizon forming. So that's what you see there in red. So it's really a nice layered deposit. The red has extremely high-grade material, so that's 45 gram per ton material that was mined historically. But it also has the deleterious element suite, so mercury, arsenic, and antimony. And then the rhyolite sequence below that is a bit lower grade, but it's clean ore. So on a tonnage-weighted basis, 70% of our resource is in this clean rhyolite ore, and only about 30% is in the mudstone horizon, which has mercury and arsenic to deal with. There's a lot of, ideas from the past that this is, a difficult project to mine, but it's really not the SK of the past. They really did mine out the majority of the mercury and arsenic in that mudstone horizon historically, and we're mostly left with the clean rhyolite horizon. We pushed forward with the PEA on this project, which we released last fall, and we were blown away by what we came up with. Just in terms of the metallurgy, we decided to just ship a straight concentrate. It's producing 300,000 ounces of gold equivalent per year, 9-year mine life, average grade of 4.17 grams per ton open pitable, extremely high grade for an open pit. 51% after-tax IRR, $638 million NPV at a 5% discount, $615 all-in sustaining cost. So an extremely robust PEA. And just getting back to the metallurgy quickly, we actually only end up paying smelter penalties for 3 years of the life of the mine, after which we're mining all the clean rhyolite ore, and we've already received life of mine contracts from smelters. So definitely a mineable project, and as we push forward with the pre-feasibility study, we'll definitely be doing more metallurgical work to just make sure that we're optimizing as much as possible on that front. So I'm going to switch to the next slide here. So we did the PEA at $1,325 gold. That was our base case. You can see at higher case at $1,500 how much more the NPV and the after-tax IRR jumps. I put in spot prices the other day, so just around $1,700 for gold and $15 for silver, and the IRR jumped to over 70%, and the NPV jumped to just over $1 billion. So spectacular projects for a rising price of gold, but because it's 4.4 grams per ton open pitable, it also gives us amazing coverage on the downside. So if gold were to drop, this is the kind of project that would still work because it's so high grade for an open pit. So this just gives you kind of the lay of the land here, the idea of the mine design. I just wanted to point out that we have an existing tailage storage facility, and also the former waste dump is where all the waste rock was put for the first few years of mine life when the cutoff was 30 grams per ton. So that means that in the waste, the albino lake, which is the dead lake, there are several 100,000 ounces sitting right now. So that's a little added bonus that we're going to look into as we push this project forward. Quickly wanted to talk about the upside potential. So we really have not done much drilling on this project other than infill drilling. So we have all those ounces, there's about 14 million tons in the inferred category that we need to bring into the infill indicated category. So that's why we've been really focused on infill drilling. That being said, there's amazing exploration potential at SK. So you'll see some highlighted areas like below the 22 zone. I've highlighted a cluster of drill results. So everything in gold here is the resource. Everything in blue is any drill holes greater than 4 grams over 2 meters. So you can see a cluster below the 22 zone that's outside of the current resource. I've circled an area parallel to the 21 zone that's outside of the current resource. And finally, to the northern end of the project, so the depth potential of the project is not yet known either. So amazing exploration potential. And I'm going to show you a cross-section now through the 21 zone where we've had some recent success. So we were doing infill drilling here. At the top left-hand side, you can see a white circle with some historic drill holes, 45 grams over 23 meters, 59 grams over 6 meters. We wanted to do infill drilling here. You can see we hit 27 grams over 9.4 meters, 17.49 grams over 7.54 meters. So we're able not only to confirm the historic drilling, but we're also able to extend that area there. And that's why we're so confident we're going to be able to get that inferred grade of 3 grams per ton gold equivalent closer to the 5.9 grams per ton gold equivalent of the indicated as we do infill. But you'll also notice here that we let one of our drill holes go below the current resource pit. So on the right-hand side of the screen, you can see the resource pit limits. We let one of our drill holes drop below that, and we tagged into 314 grams over 2.21 meters. This is a really exciting new hit for us. And it was in a new lower mudstone horizon. So I mentioned that originally that we have the contact mudstone horizon, the rhyolite cedar structures below it, and now we've tagged into a new lower mudstone horizon. You can see there's a historic drill result there as well. And this really represents where the sea floor was, say, 1 million years earlier than the contact mudstone horizon. So this is an exciting new area that we're really looking forward to putting some more exploration drill holes into. So next, I briefly just wanted to talk about the grade of Eskay Creek because it's just spectacular. So what you're looking at here, the top chart is open pit development stage projects in North America and Australia. And the bottom one is projects over the world. You can see that the average grade for an open pit mine is about 1.5 grams per ton. And Eskay Creek is sitting all the way up at 4.3 grams per ton gold equivalent. So it's a spectacular deposit. It'll be one of the highest grade open pit mines in the world when and if we get it back into production. And finally, I just wanted to talk a bit about our valuation. You can see Skeena here with whom we think some of our competitors are. We're sitting at about $158 million market cap, which puts us trading at about a 0.2 times NAV. You can see some of our competitors, we think we're very undervalued. We'd like to get up to that 0.6 range, which would mean our market cap would triple. So we have a long way to go in terms of really bringing up our value, and we're going to continue to push and tell the world what a wonderful project Eskay Creek is. So quickly, our plans for 2020 and into 2021. We've drilled 4,300 meters so far this year, over 27 holes. We just put the last of those results out last week. It was all infill drilling. We've got about another 23,000 meters left to go. We've taken a break from drilling right now, obviously, because of COVID-19, but we do have plans to get back in about the end of May and start drilling again in June. We're pushing forward with the pre-feasibility study, which we'll be doing with Ausenco, and we're targeting to have that completed in the first half of next year. As I mentioned, we're going to continue with metallurgical and geotechnical optimizations. And of course, we've already started all the comprehensive environmental baseline studies and permitting process. And then, of course, we're going to exercise the option and earn 100% of the project from Barrack and post the bond so that the project's 100% ours. So that's Eskay Creek overview. I'm quickly going to touch on Snip, which is our other project. So Snip is another high-grade, past-producing gold mine in the Golden Triangle. We own this one 100% outright. We did the same kind of option term with Barrack, and we've since purchased the option 100% and posted the bond. As I mentioned, Hochschild Mining has an option to acquire 60% interest on this project. Historically, Snip produced 1.1 million ounces at 27.5 grams per ton. So again, extremely high grade. And much like Eskay, the cutoff grades were very high because this produced in the 90s when the price of gold was low. So cutoff grades ranged anywhere from 12 to 24 grams per ton. So very simple. Again, we're looking at any material that was below that historic cutoff grade that was not economic historically that would be now. So a quick cross section here. On the left-hand side, you can see the Twin Zone, which was mined historically, produced 762,000 ounces at about 29 grams per ton. So we are looking for the other side of the Twin Zone. This is a shear zone. And in surface drilling in 2016, we tagged in a 16.24 grams over 13.5 meters. So extremely high-grade hit. Sure enough, when we looked at the historical data, we were able to model up a cluster of drill holes in that area. So we think we've tagged into the other side of this Twin Zone, the other side of the shear zone. So this is the area we've really been focused on. We're calling it the 200-foot wall as it's 200 meters into the footwall. We did some drilling here last summer. You can see the spectacular hit we had in hole S19044. We hit 1,131 grams per ton gold over 1.5 meters. So it's our highest hit to date. Unfortunately, the other drill hole we completed just to the left of it, hole 43, didn't go deep enough. We drilled that one earlier. We think it just missed the 200-foot wall target. So this is a prime area where we'd like to go back in and really determine the extent of this shear zone and how much mineralization could be there. So we'll be doing some drilling here later on in the summer. Final thing I wanted to touch on is Skeena's relationship with the Tahltan First Nation, which is the First Nations group that we work with in the Golden Triangle. So Skeena is a founding member of the British Columbia Regional Mining Alliance. This alliance is the first of its kind. It's a partnership between the two First Nations groups in the Golden Triangle, the Tahltan and the Nisga'a, the AMEBC, and the British Columbia government. So the sole purpose of this alliance is to promote mining investment in the Golden Triangle and education of mining in the Golden Triangle. It's been extremely successful. The government of British Columbia put $1 million towards this initiative last year. We've traveled all over the world with the president of the Tahltan Nation, Chad Day, and we should have some exciting news coming up about our Tahltan partners in the near future, so stay tuned for that. Final slide, just our current capital structure, shares outstanding, 165 million shares outstanding, sitting at about $166 million market cap right now. You'll see we have some warrants expiring in June, so at $1, so they're just in the money right now. So hopefully that'll bring in a few more million. You can see that we've performed very well over the last year, but we do feel we have a long way to go in terms of bringing up our value for our shareholders. So that's the end of my presentation. I'm going to open up the question box here and just answer a few questions. I think I've got about 8 or 9 minutes left. So first question, what is your monthly cash burn and cash on hand? So we successfully did a raise not too long ago. We brought in $33 million. We also just sold the GJ project, as I mentioned, for about $7.5 million, and we still had some cash in hand. So we're sitting at about $45 million cash right now. So really nice and high in cash, and that's mostly going to go towards infill drilling. And then our cash burn, well, it really depends if we're drilling or not. So I would say just G&A cash burn is about $250,000 a month. And then if we're drilling, we can usually go through about $1 million a month while we're drilling. So it really depends on if we're drilling or not. But we do have $45 million in cash right now, so that should take us through to really almost to the feasibility study, which we'll be putting out next year. So next question, how much exploration drilling have you done at SK? So it's been very limited, the exploration drilling that we've done at SK. So we did inherit a huge database with about 700,000 meters of historical drilling. And it's with that historical drilling that we were really able to put out our first resource. So we were very lucky in that we didn't have to complete all that drilling ourselves. I would say we've probably only done, I'd say, less than 1,000 meters in true exploration drilling. We've really been focused on that infill because we've got 14 million tons we need to bring into the indicated category. You need all measured and indicated ounces for the pre-feasibility study, and that's what we've been focused on. But I think we're going to see a bit more exploration this summer and definitely next summer once we finish all our infill drilling. Let's see, another question here. If Barrack relinquishes their 51% back in, leaving Skeena with 100% ownership of SK Creek, is Skeena's future plans on taking SK into production? Yeah, so that's a good question. We're definitely building a team that could put SK Creek into production. We are bringing on a chief operating officer who's an engineer. That should be announced shortly, so that's exciting, and he's definitely going to lead the charge on putting together a development team that could put this project into production. So our goal is definitely to push this towards production ourselves. In the end, everything is for sale, so it's not to say that we wouldn't sell it if the right offer came around for our shareholders, but yes, we're definitely building a team that could push this into production ourselves. Another question, do you have drilling plans for SNP for 2020 and 2021? Yes, I think I touched on that briefly. We're going to be following up on those 200 footwall targets, probably doing a few $1 million worth of drilling later this summer at SNP. I don't have an exact plan yet. Our geologists are working on it, but we are definitely going to look at that 200 footwall drilling and try and really determine the extent of that 200 footwall zone and just how many ounces could be there. Let's see. Will Skeena's Phase 2 drill program target the 25-meter buffer zone surrounding the underground workings? So no, not yet. That's a good point. Until we own 100% interest in the project, we are limited from drilling within the buffer. So, so it did say Phase 2. So yes, Phase 1 of the infill drilling is outside of the buffer, and then as soon as we own the project 100% outright, which will be by December of this year, then we will be able to drill within the 25-meter buffer zone. So just for legal reasons, we aren't able to drill within 25 meters of the historical underground working until the project is 100% ours. And that'll happen later this year. And then, yes, phase 2 will occur within that 25-meter buffer. Let me see other questions here. So there's a couple questions on timing for Barrack back-in, also the likelihood of the Barrack back-in right and clawback. So as I mentioned, we've been in contact with Barrack. They've been very open to the idea of giving up their back-in right in exchange for shares or other cash payment. This is in the works. They had a technical team come into our office in February to look at this. We're very hopeful that a decision will be made on this shortly. I cannot give an exact idea of timing other than to say we're working very hard on this. We hope to have a decision made by the summer. So there's a question here about great presentation in the area of UNDRIP. Can you provide insights in regard to Skeena's relationship with local First Nations? Will they support your excellent project? Yeah, so I touched on that briefly with the BC Regional Mining Alliance. We're very fortunate. We're in Tahltan territory. It's the only First Nation group that we're working with. They are a wonderful group to work with. They're very mining savvy. They put projects like Pretium and Red Chris into production. We feel we have a very strong relationship with them. They were founding members of the BC Regional Mining Alliance along with Skeena. And as I mentioned, we should have some exciting news coming up within the next few months that'll really solidify the Tahltan as our First Nations partners. So there's a question here about the condition of the existing processing facilities. So both SNP and SK are reclaimed mines, so there's nothing left at SNP. SK has some barracks, some old buildings left that we're actually hoping we might be able to refurbish once we own 100%, but there's no mill or anything like that left on site. So that's why the CapEx is about $233 million to rebuild the mill that would be on site. So nothing left there currently, other than to say there is that permitted tailings storage facility, but in terms of a mill, we would be starting from scratch. There's questions here on the timeline of permitting. PEA stage, which is where we are right now, it's just a bit too soon to predict the future of permitting. That being said, we've worked extremely hard in our relationships with the BC government through the BC Regional Mining Alliance, and we're hopeful that that will help expedite the process. BC government likes to say that Pretium was permitted in 18 months, so Skeena's goal is to try and get them to decrease that. So we have a lot of infill drilling to do. We're hopeful to get the pre-fees out first half of next year, hopefully full feasibility by the end of next year, and we'll be pushing forward with the permitting on the same timeline. But it's, in terms of an exact timeline, it's just too early to say right now. Next question, have you done any mineralogy studies at SK Creek and SNP? So we've done significant mineralogical studies at SK Creek. I'm not sure if this means, I think perhaps it means metallurgical studies. So we've done extensive metallurgical studies at SK Creek, and that's what we were able to put forward to smelters that actually gave us life of mine concentrate offers. In terms of SNP, we're actually investigating right now the possibility of potentially bringing any ore at SNP over to SK and processing it together. So trucking ore from SNP over to SK and blending it. And those are studies that we'll be pushing forward as we push forward with the pre-feasibility study. So there's a question here about, has COVID affected your drilling operations? So yes, it has, much like everybody else. So we were drilling at the beginning of this year, and then actually the facilities where we stay at SK Creek, they shut down every spring for spring cleaning. So that happened at the beginning of March anyway. So we shut down at the beginning of March. We had intentions to go back, but we put a pause on that. Our operations team and our sustainability team are working very hard with the government and the Tahltan right now to see how we can get back into drilling. Tahltan has been very supportive. Skeena is quite a large spender, provides a lot of employment for the local communities in the Tahltan in this area of the Golden Triangle. So we've been working very hard with them to see how we can get back to drilling. Newcrest Red Chris mine has been an amazing example of how they've been able to keep drilling through COVID. So we're kind of looking at that as a structure. We're working hard on this. We have plans to get back into site in the middle to end of May, and then should be drilling again, just starting with one drill to start with to make sure that we're able to social distance and follow all protocols put in place, but we will be drilling again, hopefully by mid to end of June. So I think that's all the time I have. I've hit my 30-minute mark, so thank you very much. I believe right after this, we go into a private chat. So if you do have more questions, you can have a chat with myself and my IR manager, Katie, who'll be there as well. So thank you very much for joining me today. And if you have any questions, there's an email address on the screen right now, info@skeenaresources.com. Thank you very much.